To the Breakfast Club. It is September 1st, getting close to the kids all getting back to school. 2024. Let's have a look at the market as I see it today. So let's start with the daily. And let's get a this stuff's gonna start coming off soon. So it's calling for, on the channel there, I was calling for 527. And it looks like we come down to we come within that range, 527 to 501. I think I gave you guys 3 options for today. So far, option 2 is what we're getting. So return back to fair value, 19,527. And now I want to push higher. I want to see that take out these highs here now. If not, we're just going to go into a compression. Look down at the 1 hour. Just take out these highs. And we have to clean this. Once you take these highs out, I'm going to see a body take the high, come back, use this equal highs here as a level of support to push up into the wick, 50% of this wick or more. If we take out that wick, we're going even higher still. So on the hourly, we came right down from 527 to 503. We came right to the consequent encroachment of that, or just past the consequent encroachment of that. And abs, you'll be happy to see that right on the money. So looking to go higher. It's looking for these highs to get taken now. Yeah, so looking for those highs, and we'll see how we act off these equal highs here at for the next hour. Get down to the 1 minute. Back here. That's the upside objective for now. Here's the low created at 6 o'clock. Or 3 o'clock, I guess that was this morning. London's low. We see this fair value gap sitting right here on a 15-minute chart. We trade above it here. We don't get an opportunity to get back into it here. So you look for this candle here to get taken to the upside. Let's get this taken here, and then we return back to it with precision right there. And we're looking to trade up right now into the premium array, which we're in right. This is not quite a reprice rebalance on this side. So we're just looking for the equal highs now. Let's quickly have a look at Bitcoin. Some levels I was marking out last week. Trader right back into it. Took out these lows. This was a reversal as well. We went through it, came back up, then leveled out on it. Came back inside, finally traded below it. Hit it again to take out these relative equal lows below us here. And now we have this short-term reversal. So I'm looking for this to get back up into here. This whole area down here. Price to get back into here. And then look for these equal highs here on the hourly. Still looking for this upside objective in soybeans. Wheat went ripping right through our upside objective on Friday or Thursday. And we're looking for these relative equal highs up here. Next. Oh, we wanted it to, I think we wanted it to come back down, give this a tap before running higher. Or through this. I'm looking for we're looking for these relative equal highs up here. This high on the 21st. And then look at this wick. This wick becomes important. So draw your quad out, your quad levels, 25, 50, 75, and keep your eye on that wick right there. This order block's being threshold we've traded through on a close. So if we do get a retracement down, I'd like to see it just come down to the top of the, I'd like to see this being left open. We could come back to these two equal. Yeah, come that back down to the base of this candle, leaving that open. If we do retouch the top of it, I want to see this portion stay open from there and then continue higher. Sugar. Right where it is right now, I'd like to see that roll over and continue coming lower. Create a fair value gap here in the hourly. Come back, retap it, and then go lower. I want to see it close down below this candle here though. So far, coffee's acting the way we talked about last week. We've closed below here. We've traded back up into it. A little bit of a mohawk. Now we're trading lower. I want to see it get through this low with a bold candle. Come back into this candle here and find some support to continue going lower. And then I'm looking for this little box down here. Live cattle, I want to see it key off of here now and start pushing higher. We could revisit the consequent encroachment of that first, but yeah, we could revisit the consequent encroachment first and then push higher for the rest of the week. Look to get above this level here and use this candle for support. Still inside that gap. Cocoa. I still like to see us revisit this breaker first before going lower. This fair value gap's important for me. If we drop below this, I'm looking for a small area in lean hogs. Down here, I want to see it break through that level and continue pushing lower. If we find some support off that level, then look for it to return back up into this, above this level here. It's got a low. This is a small fair value gap here. Traded above it. Perfectly came back and tapped it here. To go higher, take these highs out. Come back inside this. I want to see this hold here. Start pushing back higher and take out these relative equal highs above us here. Well, on the 1 hour, finally traded above here. We're back inside this, so I'd like to see oil start climbing higher now. We'll see this area stay open. And oil get some legs now and start climbing. Surgical instruments. See how this breaker here provides support. Old highs. Come up back inside this breaker. Have a down, an up, and a down, taking out that low. Come back to this breaker or this breaker that takes out these little equal highs here. Reversal. We trade through both sides of it, but we trade through to a logical level, breaker, start pushing higher, relative equal highs. And we'll see if that takes out some support here and use this candle here to get support on. Again, you just rinse and repeat here. This breaker that takes out these lows. If we trade back inside that to go higher, I'd like to see that. This is the level you want to see holding price now. So, as Michael says, this stuff works on stocks as well. I'd hit right in the right up into our level there this morning, where you're calling for. Looking for these highs here. So 635. There's a little imbalance down here. What else was it we were looking at? Natural gas, right? I want to see natural gas find support inside here. Relative equal highs. It's a high resistance versus a low resistance. So looking for these highs and looking to go higher in natural gas. Anyway, I hope you guys are doing great. You had a great weekend. I'm just going to keep an eye on, just study some price today. Just study some price action. It's a holiday today, so we want to keep your powder dry today. You don't want to be engaging in the markets today. It's one of those markets you kind of just sit and wait, just study price action. Tomorrow, the general rule is that tomorrow you don't engage the market either. Everybody likes to run back in, like Michael says, on the day after. Let it settle out, and then you're looking at Wednesday, be your day for looking for some good setups. And then it's non-farm payroll week this week. So if your trade's not off by lunchtime on Thursday, you're putting yourself at risk for heavy manipulation in the market. We're running out those highs. And a few more to take out. We have the 30th, Friday's high to take out, or Thursday's high to take out. And away we go. Now we're wondering if we're going to be gunning for those old highs that we talked about last week. They've been sitting up there at 692.75. I'm looking for these areas here now. Let's see if trade through that. Good morning, Hans. Holiday in the US. Yeah, US, yeah, it's the same in Canada here too. Greg, I've still seen decent moves still on these days, these holidays. Yeah, oh yeah, there's plenty of moves on there. There's plenty of moves. You just have to be super nimble to catch them. I pointed out a few of them this morning. So if we see this trade below here and get below this level here, then we're looking for a reversal. Now we've taken out those highs. See, it's closed below there now. Trades back up into this level. You want to go short. Not that you'd actually go short, but watch for these lows to get taken now. They're taken, and we'll see this trading back into this little imbalance here and in here. Now there you go. Now trade back into this candle here. Let me catch it right there. I want to see that just keep hammering down. Now we've caught that order block, and we called this as it was setting up. You saw me draw it out. Said if it trades below, it comes back to it, and you can get low. It didn't touch it on the way down, so you look for this one here. Traded below it, trade to it, and we continue going lower. So again, yes, you can find setups in days like this, but you got to be super nimble. To catch this on the way down. So if you take your tip tool from here to here, %50 right there. Take half off, move to break even. Come back and revisit this again. Or we have not visited this yet. We just traded through it. We've traded back to here. So if we do push through this, I'd like to see it dig into here a little deeper. Perhaps get to this imbalance and then use it to go lower. I want to see it use this one here or dig back into here. I guess not. I'm gonna keep going. Relative equal lows. Not quite 50%. Maybe it is 50% now that we've extended that a little lower. Puts us right back into this level here. 615.25. 615. Get through here now, use this as support. Keep around these relative equal lows here. Did not get through that. We just wicked through it right now. Now you want to see this continue coming down. Let's see these lows get taken now. Come back into this, deeper into this range here. Taking those lows now. Look for this level down here. No real major discount arrays other than an area of interest right here. We'll see how this, if we get a run down into this level here. Did you all have a good weekend? My family went home this weekend, so we've got a lot of visitors this week. So look for this level here. If we trade through it, look for a level of support here. I want to see it close above this though. If this little run below these lows, which we haven't done yet, below these lows, this is just a retracement back up into a premium array. We have to close above that level for me to warrant getting back into this wick. I'd like to see 10 o'clock come back, take this before running higher. Got a little imbalance right here. Trade above this. Digging into this wick and that level right there. Once we get through the premium array, those equal highs here, we're obviously got them formed. They're close, so you'd see them take that right away. %50 of that wick. See that right on the money. And then pull back. So we do not trade through 50% yet. So if that trades back into this level here, now we've closed above it. Find support inside this fair value gap, start pushing higher. Morning, Derek. No holiday pay this morning, my friend. We're just studying price action here. Looks like my option 2 I gave you guys yesterday was the play. I think I was off by oh, I think I was right in the money there this morning between 27 and 527 and 503. We got down to 509 or 511, 527. So that was the downside objective I was looking for. Now we're looking for this to continue going higher. We got through here, didn't find a chance to get some support at it. And this one here, we traded right on the close of it, opened on it. Thanks, Lon. And we finally traded above this one. We found no support at it. So this was the one I was looking for, something to key off of. And this candle here, you're looking for it to key off of that. And we didn't close above it till there. And we didn't get an opportunity to get on it right there. We just went short of that micro short of the consequent encroachment, like Michael talks about. You don't quite get the perfect consequent encroachment, you just come short of it. Now I want to see this come back, give us some support here, and start pushing higher. And this candle's wick Traded through 50% of it, just with a wick, not a body though. Now, do we get this long, drawn out kind of, I want to see the support here. I don't want to see that, there's a small little imbalance sitting right here, and I think we've just come in and touched it there. I want to see that pull back and start going higher. If we pull back into the range, that's the low you don't want to see. You want to see this stay open here. And if we just trade back into that fair value gap and go higher, that's the low end of where I'd like to see it come. So you got like 3 different levels. This one here, which we want to see right now, continue to push higher. This one here, and no more than this one here. To support going higher. This is the best one, obviously. It's the premium array, finding support off the premium array and continue on higher. Mr. Tertius Drayton, good morning. You're the first time on our channel. Well, welcome, my friend. Welcome. You can meet Derek. Derek is one of our regulars. Greg and Hans, they're regulars too. Derek's one of my moderators. He just kind of moderates, watches people's language. You should have seen the guy the other day, Derek, when he came in here. Who the fuck is this guy? This is an ICT. And he left. So beautiful return to the consequent encroachment of our premium array here. We've got the lift off you're looking for, and looking for higher prices. I just moved my trade into a, I'm like sitting here, so I'm zero stress on this trade, just letting it run. And we'll see if we can't get above 688 today. This would be the day to do it too. On a holiday, when everybody's taking it easy away from the charts, they drive this price up on a holiday and take out those highs when everybody's away from the markets. Just to screw with people. All right, we are through. I just want to kind of review this one this morning. When we start getting down to that, oh no, it's down here. In London. I want you to see this reversal. Oops. Put that back where it was. That's our gray area here. Because of all this consolidation, you want to see it break above this fair value gap right here. This open gap and that high. So change in direction, break in structure. Change in direction, trade back into fair value gap, right to the money. The perfect entry is there. If you're on the wrong side of it, it'll trade through and then you can catch it, break even and continue trailing down. But for that fair value gap here, it trades back to a nice entry. Breaks market structure to the upside. Use this candle here as support now, as a breaker. See these little lows right here? Well, I guess you can't use that one. You'd have to use this as the breaker here to go higher, because we have a high, a low, and a higher high. It does not take out, I guess overall it would take that low out there. There's a little swing low there. My point is here, look at this candle. High to low. There. Draw it out. It becomes the level you look for. For lack of a better word, we'll call it the breaker. So you look for, once price breaks it with a full candle, body, trades back into it, you look for support at that level to continue going higher. So if you didn't catch this, you did catch the breaking structure. Now that we've got a reverse or a change in direction, we have a break of a high, return back into the breaker, and start pushing higher, aiming for the relative equal highs. You've got a chunk of liquidity. You're always looking for each one of these little swing points above you. Cluster of I want to see it get down into here. It didn't make it quite down into there. We've got lots of relative equal lows here now. We could be gunning for that for 10 o'clock. We're off this high here now. If we're going to continue pushing higher, otherwise watch this level right here and that candle. Remember this level? Keep your eye on that level. We don't want to get caught in a bull trap here or a bear trap. So now it's traded below it, it's trading to it. So you want to see this continue on the downside now, but I've got to get through this candle and that low. We're going to start digging back through here. But the discount array is back down here. If this is a run back into the range, this should hold, and we should come back down into here. And if we eat through this, then we're gunning for these relative equal lows again. So that's our level of support. If we lose that to the upside again, we're going higher. We need to get through this one as well as this. When they're in close proximity like this, you've got to get through this candle and trade back into it. This is a change in direction until we get a change in direction on the other side. Joe Mack, good morning. ThetaWolf, I don't understand anything. How far have you studied ICT material before, ThetaWolf? if you haven't studied ICT or you're new to his material, and you want to learn his stuff, now is the perfect time. He's starting this 2024 mentorship for his son, who's starting out right at the minimum level, like a very little understanding to no understanding, and he's starting him out from scratch. So you can get in on that. And then you can come here and we kind of study price action as it runs. There's the 50%. So if you're inside this range, 50%, you go to break even. So if you did get in on there, you're getting close to getting tapped. Yeah. So if that was your entry there, below 50%, and you entered in there, and as soon as it hits 50%, you move to break even, take half your trade off. Again, you're waiting for this to get either deeper into here. Sorry, I'm on the wrong chart. Deeper into here. Fair value gap here. Or you want to see it really gun it down here now and start pushing, because we're just keep tapping back into this level again. Hit 50% again. So if you had here, you took off half, you put it back in there again, you take off half. I don't know about you, you're only making, not that you're actually doing this trade, but that's 33 to 29, so it's 4 handles. It's not even worth your time. You want to see it start digging down into this fair value gap here and dig down deeper into the range. So 62% optimum trade entry reversal for a long again, or we've got liquidity is sitting down here, these equal lows. So remember I was talking about 10:30 or 10 o'clock would be a great place for it to come back and get those equal lows. So we could be looking for that now. You mean look at ICT 2024 from scratch on his YouTube channel? Yeah. If you want to learn his concepts, go right back to like learn it right from the beginning. That's where you should go to. If you want to learn his concepts, his 2024 mentorship, you can't beat it, man. He's leaving some nuggets. He's leaving stuff in there that he didn't even teach us in the 2016 mentorship. Or even when we were charter members, he didn't leave that. And I'm in his private mentorship as well. And he hasn't shared some of this stuff that he's given out free now to the public. So if you are keen to learn his stuff, that's where you should be. Completely absorb yourself into that. Make tons and tons of notes. Do exactly what he tells you to do. Study, study, study. And then you come here and we do price action. We're just doing here price action studies. That's all. See how we've hit that level right here. I want to see that start eating through here now. Get through this candle's body. Let it close. That's 50% through again. There you go. Keep your eye on that level. Oh, a nice cup of tea in the morning. It's the best investment in your time you can make, that Wolf or Craig, if you guys are just starting out new into this stuff. It is the best investment in your future you could take. If you have the mindset and the discipline to follow exactly what he tells you to do, then you can make yourself a retirement early. You could start enjoying a quality of life unlike anything your friends can or you could imagine. And if you have a young family and you're starting out, don't quit your day job like Caleb is doing. He's still doing his day job and he's studying this on the side. And believe me, his dad's dropping some 4-hour videos too, and he goes into these little rants and stuff, but stick with it. Stick with it, because when you get through some of the rants, he just drops these nuggets, absolute gold nuggets of information. I watched one of his videos the other day, and he literally dropped a ton of nuggets right within the last 5 minutes of his video. When the time when people were like, oh, he's probably done now, and fast forwarded or just closed out there listening to it, and he dropped some doozers. I was like, wow, that is, I wonder if anybody's actually truly listening to that, because he just dropped it, mentioned it, and then finished up. I was like, oh, it's excellent. And you need to listen to it to find it. Remember that level we talked about? There it is. Now I want to see it get through this level and start hunting for those lows now. Use this level as support. Now, I've been calling this from this high, this swing point here, this whole time, this level. So yes, you can find trades on holidays as well, but we're just studying price action so you can see the kind of price action that actually provides you a clean understanding of what it is you're looking for. Is price acting the way you want it to act? Now we're just looking for it to gun these lows here. And then we've got relative equal lows here, and a fair value gap below us here and here. Rejection block. Do you pay yourself at rejection blocks? Because you may not get the low. It may just come down here, create another relative equal low, and then come back up into the range. I'd like to see it pop through there anyway. Did it pop through? Nope. Sitting right on it. So if you see this now, use this level here or this level here as support to go higher. Look back at that inside the range here now. So I want to see this low get taken out first before you start considering a fair value gap here. Good for you, Joe. I tell you, it's the best investment you'll ever make. Best investment in yourself you'll ever make on maintaining or trying to, you know, take care of your own financial freedom or your family's than working for the man and working for your minimum wage. Not that you shouldn't. Everybody, I think that we do need people like that in the world in order for making it work. But if you want to get out of the rat race, study this and have the discipline to follow through. So there, the lows are taken now. Look for that fair value gap here. I want to see this level now provide a level of support if we close below it. I think the market still closes at the usual time, at 4:15. There's right on the bottom, it literally closed on the bottom of that. Open. Who is Darren and Michael? I'm Darren. Michael is ICT. Thanks, Darren. I like watching you every day, but I can get on YouTube. Well, thanks, Joe. So we have not traded a body below here yet. We'll see what's the close on that candle there. 6:15.75, and the close is 6:14. So see how we're coming back into the body of it here? I want to see that hold now and start pushing lower. Now we've taken out those highs that we were looking for Thursday and Friday. Or was it Thursday? Yeah. Thursday afternoon's high. Sorry, Fridays. That was Friday's high. Taking out Friday's high now. Once we've taken these lows out, if we can continue to get through this fair value gap below us here and take these lows, we have another pool of liquidity here. I got nothing in here except for this level right here, 607. I want to see it take out the low of today. Like I say, we've taken out these relative equal lows here now. I want to see this react back and start taking back up into here. We got to get through this level here though. This is a big old breaker right here. All these candles make a breaker with a low, a high, a lower low. All those make a breaker that runs up and takes out all that low. So we're coming back inside this first level of sensitive candle here. You want to see that gun down below the lows here. All the time we're inside this breaker and we do not get above that level, we're still going lower. And next, see there's the area of interest that's done. My next area of interest is going to be right in here. We have a fair value gap here. We also have, I want to see how it acts inside that box now. Now watch how it hits to here and see how it reacts in here. It can just hit it, consequent encroachment of it, and then start running all the way back up again. Stock market's not open. Let me have a look at this one. Yeah, you're right. There's a yeah, it's still on Friday, not open yet. We must wait. See how it's tapping the box? Tippy tap the box. Now if it gets through the box, comes back and finds support at the box. I like that. There's a consequent encroachment at the bottom of the box. It's the boy in the box. So when is doing the price movement? What's doing the price movement? Oh, I don't know. If there's no, the markets aren't open. There must be somebody or something pushing the buttons, right? There must be somebody pushing a button here somewhere. Or is this an algorithm? No, it can't possibly be an algorithm. What does Michael know? It seems absurd that price would do the same damn thing over and over and over, and it just don't stop. I can just see how frustrated he could be with that. Oh man, you got to be kidding me. So we get a reaction off that level. Now I want to see it dig through it and start taking these lows, or we're going to play inside the box, find some support, and then I'm looking to go back way up yonder. Way up yonder in the Chattahoochee. We've taken out a low, taken out a bunch of lows. That one's not so important to me anymore. Now I'm looking, every time you take out a low, you look for one of these. At least I do anyway. My accidental trader took entry at 16 or 19,633 with 2 contracts would have worked out great. I freak out when it happened and close position with 2 points. Well, you feel the pain, my brother. Should have realized it was a short play. It's easy to say shoulda, coulda, woulda after the fact, hey? You just got to trust those levels, that reversal we were calling for here. And does it go up higher? So if you take low, super low leverage, not that you're going to trade today, but if you took super low leverage here, medium leverage, and maximum leverage there, so that you're maxed out at 1% or 2% of your trades, you got 3 different entry points. You catch one for a run down below the lows, bank. Or use the 50% tool if you're using that. If you're using this one here to the bottom, then you got 50%. You take half your trade off. If you use this fib tool as a method for withdrawing, and it's not a Michael way of trading or managing your trade by any stretch. He never talks about using a fib tool to manage your exits, but that's just my thing. And then having your fail safe, which is another one of my things, but it's not, it's something you have to study it first before you get comfortable with it. Look at that level, that little box, just trying to hold price like an aquarium. They're all in the fish. You say this low is going to get taken? Oh, that's so relative equal though, isn't it? It feels like it should. I just want to see how it's going to act inside this box right now. I agree with you. I think the low should get taken, but that's why I'm looking at this box. I want to see it pop right through there with a sense of urgency, like that. Run those lows and have a body still play around inside here. I want to see it wick down, smash into it, pop back up with a body that stays inside that box. And we have liquidity or a BISI, buy side imbalance, sell side inefficiency, just below us here. Now, usually, if this box is going to get activated and you're going to get a return back into the premium portion of the array, it doesn't waffle in here like this that much. It usually just comes down, taps it, and goes. The same as when it goes back up to the upside, it usually just taps it and then comes back right away. Not this kind of thing. So this is, for me, a study in price action at a discount array. And Michael hasn't talked about this, but I'm sure he's gonna. It feels like it's in his, like I haven't discovered something. It's something new for me. And I know it's probably in his forte, or it's in his arsenal of tools. But you look at these discount premium or discount arrays, which is a reversal array, fair value gap, to a premium opposite. So you have a SIBI and a BISI. So you look for the range and look for the SIBI inside the range that supports price to come down to. So I don't know if that is going to be one of his things, but it's one of the things I've noticed, that it is a continuous play over and over again. You look for SIBIs, and then when it creates a BISI above, and then you start to trade back into the range, you mostly start gunning back for that SIBI again if you don't find support off of an intermediate array like a breaker or a fair value gap or something like that. If you tend to break through that, you're gunning back for these low discount arrays. So premium array, which is when we're talking about as an array, we're looking at as a fair value gap, a BISI, and a SIBI. Watch when they line up for one, they come back for one. That's why I put that box right there for that little thing right here. Not this one, that one. And that's the one you kind of line up and see how it's just smashing around off of it. But it came off of a BISI all the way down into a SIBI, banged around on it. And then if it takes off again, you want to see that provide a level of support. Now, if it creates this, it's funny taking these lows out now, which is kind of good. We're back into this array here. Look for all these candles. I don't know if that one is, but we'll look for at least these two candles right here as a breaker. If we trade below them on a close, which we just did, we come back into them, find support. Remember, we were talking about this one here. If we break below it, come back up inside it, find support, we want to go lower. Same kind of thing here. If we see this breaks below this, we trade back into it. You want to find support on this. If it doesn't, if we eat through it, then you look for a SIBI on that side to support another run back up into this range again, or at least back up into the order block above us here. Because there's a swing right here, order block candle, takes them out. So that's my upside objective. I want to see get taken for a break in structure. This would be technically a break in structure, but I've got nothing in here that really supports a reversal except that guy there. So I have to rely on this older one here instead of a nice clean one starting here that I can get in on to go back up like this. There's a nice clean one you could get in on to go down. I haven't seen one on this side start forming yet, so you're just waiting for something. Now you've taken out this low, you're waiting for a SIBI to form in here to create a reversal. So there's some criteria to look for. The SIBI, then you wait for, here we go. This would be a great place to form one. So if you were short from up here, oops, let me reverse that. Lock that in there. So if you were short on that one that we were calling earlier, and you've run for this liquidity, you pay yourself, pay yourself, pay yourself. Next level, pay yourself. Every time you get to these little low points, right in here is the next little box. This little box here, and it moves right down into there. Let's see how we get on that. Nine, 6, 7 is your target. 9, 6, 7. Yeah, 9, 19, 5, 70, 568. New day opening gap, new week opening gap below us. Morning, Dave. And those of you who are new to the channel, Dave is another one of our longer term fellas that's been around for a while. Thanks for popping in, Dave. Now, Dave's a good example of a guy who's was studying material and he's been picking it up really quick, and he's been able to make himself moving ahead in the world. Let's put it that way. He gets to get a bit of a shuffle out of the mundane, and he's using the principles extremely well now. It's really exciting to see how Dave's improved over the last 6 months. It's been excellent. Yeah, it's easy to say, Greg, like, why don't you take those trades on those days? You can. That's your personal choice, whether or not you want to risk. But there's, in markets like this, there's just, you can't expect price when the markets aren't open to act normally. Now, today we're getting some nice clean price action. If you see it and you want to take it, then that's your choice. But you've got to be prepared that when markets don't always act as they normally do when the markets are clean and open on a day when there is no holiday. So you're right, there's always price action. And if you see clean, this looks way cleaner than it normally does at 10 o'clock, right? We finally did take out those lows we're looking for at 9:30 or 9 o'clock. We're looking for these lows to get taken for a run back in here at 10. We got that. And now look at this. See, we finally taken this. All these lows here have been taken. We've got new relative equal lows below us. This little piece here. So I'm watching right here right now. And then this candle and these two candles. That's key level right here for a break in structure to the upside. I want to see this fair value gap form here now and see if we can't get a reaction off of that. It's hard for you to set up a stop loss. Your stop loss, I have a fail safe thing I like to use. And that manages, it's a moving stop loss. It's a fail safe. There's a stop loss and then there's a moving fail safe, which is like your stop loss is your limit. Like that's the absolute, the limit I'm willing to lose. If you're studying price action, you're saying, I don't want price to go down below. If it breaks past this level, then I'm on the wrong side of this. And for example, if you're running down on this trade here, there's several different ways that you can do it. One is doing the fib tool I showed you, and you just take your profit on the way down. If it comes back and taps you out, and that's using the fib method I showed you. Another method is you look for this swing, and when there's a swing in the opposite side, that's your stop, or that's your close of your trade. If you haven't hit your objective. If you have hit your objectives, every time we clear out an old low, you pay yourself on the way down. You can either go, if once this low is taken, this here, you move your stop loss to the old low. And if that stop loss is taken, you move to the old low. Or you wait for the reversal to happen in the opposite direction. So this one here, we got on, and you just ride it all the way down. There's no reversal, no reversal. We're looking for this one. Remember we said here, if it gets above it, didn't. Kept going lower. You're still in the trade. This one here did not get above it, still in the trade. This one here didn't get above it, you're still in the trade. It's hit an objective that I was looking for down here, this little box. Just wicked into it. Now I'm looking to see this. If it trades above it on a close and comes back and taps it, that long trade there, you could close it out and say, this is the next potential reversal. But it has to close above that, and ideally above this candle here. Find support at that and keep pushing higher. So many different ways to manage your stop loss. It's a personal preference. So you could, if your stop loss, you're using it from a fail-safe perspective, your fail-safe would be right here. Because you know that if it trades above here on a close, then we're on a potential reversal. So that's the high that you would put that at, is if you wanted to go short. So you're waiting for this to close above this level, not just wick, but close above that level. If it doesn't, wicks do the damage, and we continue coming lower. So now these lows have been taken, that low has been taken, and this fair value gap's been filled. We came back to this imbalance, is what I was looking for right here. This imbalance, we've got it filled perfectly. Now we're looking for this reversal to happen. Yeah, NQ seems to be where shittier on the days that there's actual market activity. Today it just seems so clean. These are nice clean entries this morning. It hasn't been that choppy chop crap that we're used to seeing. You're right, Craig. That just goes to show you, if you're expecting whatever it is you're expecting doesn't pan out, you just got to be prepared to stay in price action. Stay on the horse. That's all I'm trying to say, is how do we stay on the horse and start to look for opportunities for when price changes direction? So watch, now we've closed above it. Now you look for it, see how it's come back into that level. I'm going to just put a buy order on that just for shits and giggles. And I don't want to lose more than 50% of that wick. I want to see this provide support. Now I don't want to see it start chewing through it multiple times. I want to see that just tap it and start moving away. For me, if it's clean enough, we find a support off of that. That would be like the perfect entry right there. So that if it trades through it and comes back to it, you can get your trade off at break even. So now I'm looking for the whole range. You look for the rocks. This is the rock wall you want to climb. Where's all the footholds that you want to find price? That, you know, you can find footholds now in the rocks to continue climbing higher. And where does it fail for you? Where does the rock break away and you fall? So you got to have your fail safe. You got to have your stop loss management. Then you want to watch your fail safe. So for me, if it trades below here on a close, I'm on the wrong side of this. So for me, if I want to see it break above here, then I will start pulling my fib tool on the first swing. So that's probably the midpoint there. There's 50%. You can move to break even. I don't want to move to break even just yet. I might come back and revisit this. I don't want to see it cut through here anymore. Then it comes back and taps it. Great. I want to see it get through this candle here now. So you can take a portion of your trade off here. So let's just we'll wait and see. Now I'm going to move to break even. 62%. We're just going to run this exactly like we do. If it gets to 62, we'll just play it the way it using the fib tool for now. There's 62%. So I'm going to come to just at 50% there. So now it's a zero stress trade, right? So you take a portion off there, you take one off if you're doing that method. So you're looking for 70. Because don't forget, we're looking for optimum trade entry reversal inside this smaller range here. If you want to take the whole range, once we get through this 50% of the range, then so if we did this and move to the 62%, 70. So here's your optimum trade entry reversal. So if it ends up going through this and keeps eating through, that's the foothold. You want to see this whole price now. So if it hits 70, you move to 70, or 75, move to 70, take a portion off, and you're paying yourself inside this trade here. So if you were short on this, there's the reversal right there. So it traded through it, traded back in. You close that trade and then go long. If you're really bold and you want to go long, then you go long on that. Because now you've got the reversal. You see the reverse here. We gave you this. We talked about it as it was setting up. There's the short. And now here's the long. Now, ideally, I'm looking for this box back up here now. So I'm just going to let that sit. I'm going to try and ride this baby out here. Here's 88%. So you'd be like slammed up against 77. And we've broken this structure now. So there's any time you could see a reversal back into this old high and then start pushing higher. So then you've captured all your profits inside that level. But this would be nice if it just gunned it all the way back up here through that level. So we've gone from a discount array, SIBI, to a premium array, BISI. And I know Michael's going to talk, he must talk about this. I haven't discovered something new here. For me, it's new, and he's never mentioned it, but I think this is in his repertoire. It wouldn't surprise me if one day he mentions fair value gaps, using SIBIs as fair value gaps as premium and discount arrays to aim for. Look for the opposing one on the opposite side. SIBI, BISI. If it's not, then I've discovered something new for myself. So watch us get through here. This would be great to finding support. So rock face, we're climbing hard, man. We're scaling this wall like a mofo, looking for this level right here. Bingo. Discount to premium, like to like. I'm going to move it right to here now. I want to see that. Eat through this discount array. That's, if it comes back to me here, I'm okay with that. We've got lots of BISIs open, so now I want to see that start gunning all the way through here. At least to this consequent encroachment. Oh, it's going to take me out here. There you go. See how you tap it on the edge, and we can come all the way back into here again now. So a larger range, if you're into the larger range, and use the, if you pulled it from the larger range, 50%, 62, moving your fib that way. So if I would have got to here, there's 70%, 75, I would have been at 70. I was at around here. So it just came back and would have tapped me out anyway. All the other levels would have taken you all the way up to here. And then it would have come back and tapped you out right there. So you still would have made optimum trade entry reversal in the large range. So if this reverses in here now and comes back down, you'll be like, oh my God, man, I nailed that reversal wrong side, even if it keeps coming all the way down and you don't take that high out. And this level, this premium array finds support at an optimum trade entry reversal, 79%. And it should keep going now. But we'll see. It makes my point very clearly. I mentioned this earlier about premium and discount arrays. When they start from one, look for the other one. Now, if we're running through here, I don't care that I've lost more off of that just because I pulled my stop loss too tight. That's just my management, my stop loss. So I'm not going to beat myself up if this takes off, because now you look at this and go, if it trades through here on the upside and it comes back into that and finds some support, that's potentially a continuation on the upside. We want to find support off of here now. Now that we busted through it, that's an extension of the range. Stuart McAllister. Oh, I used to know McAllister. Used to know the McAllister sisters back when I was in high school. Welcome, Stuart. Can you explain the imbalances you are referring to a bit more, your downside target so far? So if this was my array that I find my reversal on, so you look for a BISI that takes out an old high. There's your high. I always look for, as soon as a high is taken, I start looking for this. I start looking for this. And if I close below it, and we were talking about this when it happens, it closes below it and trades back into it. So 1, 2, the consequent encroachment, and the high are the three levels that you can look for trades, 1, 2, or 3. The best one is right here. If you can catch that one and you're on the wrong side of it, you can get out as a break even with your fail safe. If you don't understand fail safes, I've got a video out in my section there on fail safes, so you can look at that up. Trades back to it. So now you're looking for these equal lows below you. That's where you're gunning for your first profit. So take some profit there. And as we explained earlier, if you're looking for the next opportunity to take that trade off, you'll wait for the next reversal. So as soon as it takes that low out, you're looking at this. If it closes back above it and goes higher, I'm going in the wrong direction. So I want to close that trade out once you've already paid yourself here. Now you may say that's a lot to retrace all the way back up here, close above that and lose that. That's a lot to retrace. Well, then that's how you have to play that one out and say, well, when I see a reversal, I know I'm on the wrong side of this, so it's going back the other way. That's why you pay yourself at the lows or 50%, whatever you're going to use your fib tool, or you just wait for the reversal to happen. So if you're in this short, you say, I'm going to stay in this. It came all the way down to that objective, pay yourself. Move your stop loss to break even. And then you wait for the reversal. Here's a reversal. We've taken out lows over here, low, low, low. All those are lows, right? We took out that extra low, the other little objective I was looking for, the box of interest, and it reversed. Discount array. Overall in a larger range. This larger range right here, discount array. Right there, that's what I was looking for. Here, I have one here. Next one was here. We traded through it. Great, where's my next one? It's down here in a larger range. Right there, it hit it. Beautifully. Reacted off it. Then I look for reversal here. So then this trade here, once it hit that objective, and I saw this reverse happening, and you see it pop above it here, that short trade, you close out. You can close out right there. You trade back into it for a long, and look at this. You've just caught a massive run. So you've caught both sides of the trade there, because the algorithm, not the guy in the office that's banging his gavel saying, everybody come to order, we're stopping the markets right here. And somebody says, oh, wait, the market's not even open today. And they go, hot damn, how did that happen then? Because it's algorithmic. There's an algorithmic delivery, and you go back through your charts. Don't believe me? Gotta sound like Michael. Don't believe me? Go back and look for yourself. Test it. You'll see. You will see. And that's what I look for. That's my go-to trade setup. You see, you come here every day. I'm doing the same damn thing, looking for all these reversals, inside ranges, inside breakers, inside breaking market structures, find support off of market structures, and then look for a premium array to break it, look for rocks to climb, the fair value gaps. I just look at that as the rock face, and as you're climbing it, you are finding footholds above price action. If they just keep gunning through them, look for your equal highs, look for your relative equal highs. Now you were looking for, maybe we're talking about the support off this level here. See how the body trades above it and literally comes back and taps it right there. And now you start going higher. I mentioned that as it was coming from here. If we go through that candle, we look for the high of that candle to get revisited. It tapped it, and now we're starting to climb higher. I don't like the fact that we just were poking here, poking, and we're not getting any further big drive like this. Now we've cleaned out liquidity. I look for these little fair value gaps to get taken to the downside, and then we'll retrace back into this range. Because it's a day that the markets aren't open, you could see this seek and destroy type of thing, a day where it runs from one high to the next low. And it's not uncommon for it to start gunning for highs that we were looking for during regular marketing hours on a holiday. Just run right up there and take them out when people are taking the day off, right? What level is small purple box that price wicked to? The purple box, this one right here. Is that one you're talking about? That's the fair value gap in the morning. That's the first fair value gap, that's all. Or you're talking about this box here. That was just the imbalance. I was looking for this little price imbalance, which is like looking for this, remember the SIBI? I look for the SIBI on one side and the BISI on the upside, inside the huge range. So I just tend to look for where's the next one? Where's the next one? Where's the next one? And I look for SIBIs, and I look for price imbalances, and I look for gaps. And it came all the way back down, filled that one, all inside that guy right there. hit it, and then you want to see the reaction. Remember when it was up in here, I was going, I want to see what kind of reaction it makes, and then it drove down, or up in here, I want to see what kind of reaction it makes, and that drove down. I go, great. Well, if it keeps going down, then I look for this. And remember I said there was no opportunity for me to get in on a long here because I didn't see anything happening. So you wait and go, oh, there it is. It forms right here. Where's the next downside objective it could reach for? Well, old low here, and that little imbalance came down, hit it beautifully, and then we see this nice little reaction through here and go, oh, good. And then we got on that for the long run. This is the objective you were saying. Once we get through here, if we don't come back and tap it and keep going higher, then you look for this old high to get hit, and it came back right there. It traded above it, tapped it, and now we keep going higher. Yeah, that's what this one right here. So that's what I was looking for. So I always constantly keep looking at the range that we're in, and I keep looking for what's the SIBI, what's the opposing PD array on the opposite side of that. Great, thumbs up. No, those one at the bottom of the chart with a wick or to it. Does that make sense, Russell? You are welcome, my friend. You are welcome. So next thing we're looking for now is the 19652 to 19690. Draw that. 19652. 19690. Which I think is right here. Right there. Next upside objective is here. So that from there to there, 633, even if we sit down to the reversal, is 30 handles. Inside here is 30 handles. And then from here all the way up is 30. Is 64 handles so far. So far I've given you 100 handles worth of playtime. And you've got both sides of the market on a day when the markets are closed. If we trade through this, $19,700. Look for 19,700. That's the drawn liquidity for the weekly. New week opening gap low. That's where we're gunning for. So watch imbalance. Yeah, we traded below the imbalance, came back up and just tapped the edge of the imbalance right there. We gapped open above it, and now we're starting to run back down. So I'm 51% bearish right now. If we trade above that again on the upside, we're looking back for that 50% of the wick on the hourly, and we'll look for the highs of the 29th. We gunning for Thursday's high then. If not, we have downside run. I want to see this candle give way. You look for that, see that little imbalance? See how we traded below it? And then literally opened on it and started running. That's that. I'm heading in the opposite direction. Here I go. Poof. You just slipped on the rocks. You hit the peak. You're right over the peak. You slip. So watch. Now we've got to get above this. And see how there's no swing point here? So we have no break in market structure yet. We've just got a slight change in direction. Could be just inside this small little range here. We've got imbalances back here. We've got lots of wicks. This could stay open as a fair value gap. Find some support off of that and continue coming lower. So we get this little run, reverse, smart money reversal, low risk sell, and start a sell model. I'll be traveling to Canada so that you can hypnotize me with all the core content videos. Ooh, I should do that. Do a hypnosis session on that for the week. See, there's your fair value gap. Now hit it and quit it. Come on down. Again, we haven't taken out a low, so this as a reversal is not really a reversal, but it is a level of fair value gap and support that you can find when it becomes inversion. Once we trade through it, come back and find support at it, you can still get a lift off of that. So you slip on the rocks, create this little foothold, and then start pushing higher. We have not breaking anything down below us here, so don't get yourself too excited about it being the full return south again. See, now we're trading up and we're trading through it, but we already started driving through it, so you're looking to go higher. This here, look for that level to be your support. Would that be great if you could just, if I could find somebody who was a blowdown and loved studying Michael stuff and help them overcome some of their anxieties around trading? That would be a fun hypnosis session to do, because I could totally relate to them. So I could really get inside their head and help them with the haven't had a body above it yet, just a couple of wicks. So we'll see if this level holds or not. Yeah, do a session like that on hypnosis would be kind of fun, and see what kind of results people would get. Dave and Russell, you could be my guinea pigs. See how we're, if this candle here in the next 10 seconds closes above it, watch to see if this or this level finds support and continues taking us higher. Your stop loss would be sitting here. It'd be like, oh, I'm on the wrong side of this now. Now, if you're on the wrong side of it, like there, we've closed above, it's going to take you out if it doesn't give you an opportunity to unload your position. Your stop is sitting right there. Right there, you get your position off and you wait. So you break even, come back into here. Now you wait. There's just too much going on here now. So now you get your stop losses in. Here's your fail safe. Where it comes back, gives you an opportunity to get out of your trade, because we could be going long now. We continue going higher. Come back inside it. Trade back inside. We don't even get the return to the fair value gap. and we want to see that start really gunning up higher now. Get some momentum. See how you can see when you're on the wrong side of it, it just tips its hat to you and says, I think I changed my mind. I came back into here, wanted to gather up something back in here on a lower time frame. You could probably find something on a 15-second chart that's reaching back for. Trades above, gets above our inversion or our little imbalance right here. Comes back inside it. High's not taken yet. So I'm 51% bullish now. Just because of that, those two levels. Now you got that taken, there's your high taken, you pay yourself. Pay yourself. I know it was the most recent high though. You have to pay yourself. And then you wait for another fair value gap to form above you. Or you just, if you're in that trade, you just keep letting it ride now until you see a reversal on the opposite side that says time to get out, we've changed direction. It sounds simple, but trust me, having the discipline to do it, it's a whole different thing, because you're looking at that money you're making on the side there and you're like, oh, look, it's up. Oh, I better start taking some money off. You're still looking for that 51% of the range above you. It's coming back to tap that. If it works through here again, you've taken the high. There's a fair value gap there. This one for the reversal down, this one for the reversal up. So they're overlapping one another. You come back to the consequent encroachment. Give me some lift now. So this candle here, this little breaker that runs up, takes that high out, just popped above it right here. If we trade through this, I'm looking for this to give me some support here. So there's your ideal level, that if you're on the wrong side of it and it closes below, comes back, taps it, oops, then just came back, filled it perfectly. Now you want to see react off of there. I would like to have seen that stay open. You got two overlapping ones. One's the support going lower, and one that supports not a strong support because we haven't taken out a low, but it is a fair value gap to come back, reclaim the fair value gap, which is now inversion. You want to see it provide support, right? This is the rock face. You want to find some legging on, some foothold to push higher. And this one here is the pocket that you fall in. If you're on the wrong side of it, then that's where you put your piton in there to repel it back down into the range again. Already on the wrong side. So now you're looking for the sell side. I want to see this low get taken out. That's a structure break. We have a change in direction, structure break. Come back in here, give me a little bit of tap on that and start running for that low. And if all we do is go sideways here, you stay on the horse. It's just spinning around now, trying to shake you off. Stay on the horse. Stay in price action. Study this. Watch carefully now. See how it's traded through this and this one and this one. So that supports this reversal. Now that we've taken out that high with that little swing there, this one's the level of support. Now if we climb above it, you're back to this one again. Even though we haven't swung below it, I want to see that low get taken, and then this guy becomes important if we're going to go above him. You got to get above both of these now to go higher, or stay below this guy to go lower. And when there's only one inside this range, you can only use them overlapping. You have to kind of stretch this out to that little spot right there. That's the big range that's kind of has to react off of one to go lower, one to go higher. So watch it now and see how price acts inside those two levels. And if you're in a trade on that, you can see how you're going to get beat up because you don't know which direction it's going to go in. Your higher time frame, what does your higher time frame say? We're inside that 1 hour wick. I think we've hit the 50% of that wick, have we not? Let me have a look at this. No. No, not quite 50% yet. We're just over a quarter of that. So if this is weakness now, because we're in 25% of that wick, our body is not closed above 25% of the wick, this shows weakness. We like to see this level here provide support and continue coming lower now. You may say, well, there's relative equal highs up there. That's true. But all the time I'm seeing price action tell me I'm going lower. I'm going to support going lower. Not that I would take a trade here, but my idea is this going to go lower, finding support off this? Or do we come up here, run this one more time? 9 o'clock, so it'll be a great place to run it. Nine o'clock, run for the equal highs. When Michael says when you got both equal lows and equal highs, wait for one to get taken out at the top of the hour, and then see if there's a fair value gap that you can key off of inside here. Or do we support off this breaker here and go lower? One p.m. Enjoy your days, guys. See you tomorrow. See you there, Derek. I hope you have a great day, buddy. Have a great, great day. Yeah, it looks like we're going to come for the top ones first. And then you look for a reversal setup in there. What I'd like to see is this go up, create a leg, trade back down below this, and use this as a cam model, one entry for a short after taking these highs. You have a cam model 1, 2, and whatever is created up here. If there's I like to see a little fair value gap form up here, trade below it, come back up, and use this here as a breaker that we can get in on to go short. So kind of start watching your price action now and look at these levels and say, when do these turn into breakers? When we take that high out, those 3 candles become a breaker. So I'd like to see a nice little fair value gap form on up here that takes out these highs, keeps us below that 50% of the wick, brings us back down, and you have one of 3 cam models you can use here to go short, and you can use that as your swing projection for a 2.5, 2 to 2.5 rundown. There's a lot of bissies on the way up. A lot of people, retail's looking at this as a bull flag. That'll be a great opportunity to take them in and then slam it back at lunch hour and take them back, rake them all back across the rocks here. So just look for your opportunity to see the reversal. Now, if you're starting to lose focus and you start to say, I don't know if I can stay on price action like this, you have to stay on price action. It's compressing. So you go here, shorter. It's going to bust out of here now. It's going to take this high, this low. So we're waiting for one of these upside of text. Okay, so the downside's taken. Now do we run above the top? Take the top out. Still, again, waiting for a signal to give us a an entry. Right now, there's nothing here. We're just looking at this guy here. Does it provide support? We're back into the equilibrium of those 2 fair value gaps. Now you want to see if the body closes here in the next 20 seconds. You're looking for a support on the base of this to go lower. And then if we trade back up and through this one again, you're looking for these highs to get taken then. This is the trouble with inside consolidations. You look for these little fair value gaps, inside consolidations, and watch how they run from premium to discount. If you're one fair value gap below, one fair value gap high inside a consolidation, watch how it runs between those two. So we wicked below the low, opened right on the low, extending down. I still don't see anything yet, so just wait. You want to see it come back up and tap that. Like it did right there. Cam model 1. I want to see this low take this fair value gap here. I want to see this little swing here and these relative equal lows here to get taken out on the sell side. Don't forget, we can come back, revisit this later. I like the idea that this is 25% of that hourly wick to show weakness. And I like to see that continue coming lower now. See, now we've taken out this low. Watch right here. I start drawing these all over the place here. This is where price starts to get really choppy on you now. So you have to keep marking out a lows taken, fair value gaps formed. If we get above it, close on it. You're looking for higher prices. Then you want to see this premium array up here Discount, premium. You want to see that premium one get taken to extend the range. See how we literally closed on it, tapped it, and then bloom. Always keep your eye on every time a low is taken, look for this. Open and literally went snap and left. Drove right through that, took out the highs. Now what I want to see is this fair value gap form up here. Because that, I think now is just shy of 50%. 50% is 671. We just got up to 668. I wanted to see a fair value gap form above this high, not below it, but okay, I'll take it. So now you see how these all become what? 1, 2, 3, 4, 5 candles now become a, what's that called? Breaker. See how you trade above the breaker? Trade back into the breaker, right to its opening price right there, and we start going higher. This, remember we're looking at these three, we didn't get them to turn into a breaker, but these ones did. Little imbalance is forming here now. Little imbalance. Morning, Lauriston. How you doing, buddy? How's the firefighting down there in Trinidad and Tobago? Hope you're staying safe, my friend. It's nice to see you back. We had a killer Lauriston trade this morning. This is a classic Lauriston play right here. See that reversal? That's when Lauriston would have been in and killing it. I want to see this candle here provide support. Or these two here. All these are a breaker. Up close candles before it runs these old lows. Breaker running the highs. So you've got breaker here and a breaker here. All that ran out this. all this, ran out all that. So you want to see this provide support, keep pushing higher now. And that drawn liquidity is that weekly price or new week opening gap above us at 19,700. Ah, nice to be on vacation, my friend. Good. Enjoy it. Where are you heading off to? You heading off to the tropics like Trinidad, Tobago? Are you going to go somewhere cold? You can't even come to Canada. It's hot up here right now. So watch, see if it gets through this level here now. Now for this, you want to see this to be a breakaway gap. You want to see this stay open, that wick to the consequent encroachment. You want to see this start to push up higher now. And I don't want to see this close in here. I'd like to see that stay open as a breakaway now. Nice. How much do you get for vacation down there? A week or two? Or do you guys get to split it up and take portions, like you get the bank days, holidays? We used to bank holidays, and you're allowed so many days per year to bank, and on top of your regular vacation hours. And you could bank that and take a longer vacation, or kind of split it up, take some extra sick days if you wanted as vacation days. Do you guys, are you unionized down there? Do you guys have a firefighter union? Back in the day, I was the president of our union. And I tell you, that's a lot of work, a lot of stress take on for all your guys and your gals that are in your department. Take on the responsibility of trying to negotiate better wages, better work conditions. Are you in your union? Do you act on on the board at all? I like to see this breaker here continue to provide support, go higher. funny. I don't know what your guys are like, but you know, if you're doing a good job, you'll know you're doing a good job when nobody asks questions. They just leave you to do your job, and you feel all the stress of dealing with all the responsibilities, and yet your guys don't ask too many questions about it. They just kick back and they just enjoy their work. Then you know you're doing a good job. But then you go to the next meeting and you go to a bunch of area meetings where all the union presidents meet up and discuss what what's going on in all the other departments around the province or around town. So as we watch this paint slowly cure on the walls, we're still finding support, looking for our reversal. We've got the reversal, blast through, creates a fair value gap, finds us some support above it, and now you want to see continue to push higher now. Again, looking for that new week opening gap. And then in the next 10 minutes, if we haven't drove up there hard, I'm looking for it to probably come back down and take this here first. Like come back into this range. Look for this level right here. Look for 71. 71's right here. That's 50% of the hourly wick on Thursday. Looking for this to the next 8 minutes. Come back into here or here. Take this low out here before going higher. There's the first one. We've returned back to this fair value gap here. I want to see this low get taken out. We might get this little swing below here at 11:30. And then run back to these highs here. We're back inside this. So this was the reversal below these lows. Reverse. We haven't come back into it. So you look for this, find support. You look for this to start pushing above here, off that level. And you started to get it, then all of a sudden it started popping back down again. I don't like all this waffling here. It should tap it and get the hell out of Dodge, right? You should see a distinctive, I'm getting out of here, right? So once you see it, it trades above it, comes back, taps it, and then leaves with distinction, right? You don't see, you shouldn't see this waffling around here. And we're just coming into the lunch hour right now. So now we've traced all the way back down into that reversal, you see? And now we're looking for some support off of it and pushing higher. I don't think it's going to happen. I think we're going to take this low out first. And then you look for it, see how we've taken this old high out. We've got this one and this one. Remember, these two are overlapping. This one isn't overlapping, but they're really close now. So this one supports a run down. So you've come back up inside that one. And now you're looking for a premium to discount array in a large range. And you're already at your discount array. So if you want to extend the range, we want to see it trade below here, come back, find support at this, and ideally get below that low and find support at this low and inside that fair value gap there to go lower. We're poking through it on a wicks, so we're drilling. So imagine it's like a drill bit. You're putting drill bits down into this breaker here. See how we've kind of eaten through the mean threshold of all of those candles? The last candle is the most sensitive one. So we're drilling through the mean threshold of that candle. One drill bit, 2 bit, 3 bits. It makes that weaker and weaker till the rock gives way and that ledge falls and you drop below it. That's my analogy of that anyway. So you see how this reversal, you're inside that to go shorter, take out that low. Not that you want to try and collect 5 handles off of that, but there's your change in direction. Come back in, find support, push lower. We're looking for this low to get taken. And now this low is given away. See how we've traded below it now? Now that low's taken. And there you go. And we did it all within that 10 minutes I was talking about. Equal lows here. Now this level becomes important. Just shy of 50% of that wick, which is nice. Look for a reversal. Here's the reversal. Confirmation. Break that side on the downside and then take this. So we've got 3 different things confirming a lower price. Or for me, they're confirmation of a lower price. So until we see a fair value gap forming in here and that low get taken and then we get taken to the upside and start running back up above this again, I'm bearish. just shy of that consequent encroachment. Let me just see if I've got that marked out properly. It was 671.5. High on that candle is 66975. Just shy of 50% of the wick. Look for reverse. Got a reverse. Look for support off of here. And don't forget, we can come all the way back up inside here or here and still be short. If we get on top of this with a close, different story. Watch this one here. If we get on top of this, then we're looking to run back inside this range. So you look for premium array, which is this one up here. I want to see this breaker hold price though. That whole area gets a little sensitivity. I want to see it snap on it and pop off of it. Come back down. See how we just closed below this? We haven't closed above it. So draw your little, always keep your, try to stay on the price action. You just want to keep looking at these little levels all the time and say, are these becoming inversions, or were they just fair value gaps that support price and continue going lower? Or do they support price, become inversions, and then push higher, back up inside a range? And we're coming back off of a breaker here. What would it, my question to you, Debt Wolf, is what would it matter if I was? Would that be a reason for you to take the trade? I'm just trying to show you price action. Whether or not I take a trade is irrelevant. Whether you want to take a trade is entirely up to you. I'm just trying to show you how to stay on price action. That's all I'm here to do. I show you my setup and my trade entries or my trade objective. Whether or not I'm off screen here, taking a trade shouldn't matter to you. I just want you to focus on price and how price is running and what I expect price to do and where I expect it to fail. If it fails, that's where you can think, is that where you'd put a stop loss? If Darren was in a trade, where would he put his stop loss? Where will it fail for me? If I'm on the wrong side of this, where would it fail? If I was reaching for an objective, what would I be reaching for? Because you don't want to copy me. You don't want to take trades that I'm taking. You want to read price action, set up your own model, and see if it works for you. Yeah, if I'm taking trades, it's off screen. Sometimes I'll put one up here like you saw me take that one this morning. But if I get a clean entry like I did this morning, the one you saw me take here, I was in that on my live account, not as well as this. But we're moving into lunch hour now. So you don't want to be, you got to be careful about what lows you're reaching for and whether or not this can reverse on you and where does it fail for you. Now that spot I just highlighted there, it hit it perfectly. If we lose this to the upside, I'm inside this range again. Put my crosshairs where I think, where I want to see price go to. And I will leave my line there and see what kind of reaction we get. You want to see if we can get through here and use this for the support, running back into here. There you go. See it close below there. Again, there's nothing in here that would warrant me wanting to go long right now. Watch here, see if this reacts and continues going higher. We're back into the mean threshold of this last up close candle here for taking out these lows. And I want to see if it reacts here and starts pushing higher now. See you later, Russell. I got another few minutes and then I'm out of here. Downside objective for me is 629. See you on Wednesday, my friend. Thank you, Mr. Pips. My pleasure, my pleasure. This week. It come down from here. Sorry, I had my crosshairs earlier I was telling you about. So I want to see that, I don't want to see that come back up through there now. And the reason I picked that wick there is because there's also a little tiny imbalance in here. If I stretch this out, you'll see it. See that little imbalance right there? Which is 50% of the wick, and that imbalance came through this one, this one. I don't want to see it revisit it. That's the problem. Starts to eat through it now, then it's definitely on the wrong side. Get this guy out of here. See how we've traded above here? Find support. I don't want to see this keep getting through here though. Keep in mind that weekly drawn liquidity above the market. And watch this level right here. Through here now. I'm up on top of this. Get on top of this little ledge here. Break structure. Find support off this candle and this fair value gap. Start pushing back up into that level right there. Premium array. And the same thing we saw earlier this morning. The same thing we saw down here for this, running back up into that premium array I was talking about. As soon as you see it bust through, you want to see it run higher. Same kind of principle here. We've got above this array here. There's a bunch of little imbalances in here we found support at. Get above here, break in structure, start running back up into this level here. And see if we start just tapping it and coming back down again and running for this low before lunch and then taking out this low and then running back and taking out that high. So we've got above here now. Break structure with a close. Want to find support in here and push higher. So we found this support here. You break above that high, come back, find support at it. I want to see this start climbing higher now. Kind of very slow price action during coming into lunch now. We could just be marching up and down inside this range. So that's the upside objective. Anywhere inside here. And again, if you just hit the rejection block, sorry, the consequent encroachment of this, and then start to come back down again, you're just trading inside here for lunch hour, looking for relative equal highs. Now we've made these lows, taken out the lows. We're looking for these relative equal highs. If this fair value gap here gets taken to the upside. And right now we're looking for the climbing on the wall. This is the first foothold right there with precision, I might add. Now you want to see the next one. Climb up on top of this one. That's the next. Jam your fingers into the crack in the rock and then hold on and pull yourself up and get through the mean threshold of this candle. Five more minutes and I'll leave you guys to it for the rest of the day. I hope you got you learned something today. I hope you got to see price action and a nice price action model entry and a nice study in price action too. When we gave you a precision entry this morning in here, you had a perfect entry. I gave you your downside objective. It hit the box we were looking for. And we had a reaction off of that box, looking for this, found it, talked about that the whole time this was forming, and that objective was hit. We're looking for this to form, that to get taken out, traded back to it. We took the trade, and you got to see me take the trade on the way up for upside objective. Hit, went through it, good. You're looking for the support off of this candle. We talked about that. It drove through it, came back, it tapped it, and we talked about the continuation on that. Then we looked at this reversal. We talked about the reversal happening, getting in on another reversal, taking out lows, and now we're looking for this reversal on the way back up again. So I gave you both sides of the market, up and down, this morning with very tight accuracy. I hope you got a chance to enjoy that this morning. Yes, Randy, I'm very aware that it's a holiday. Thank you. If you were here this morning, you would have known that it was a holiday. They talked about it being a holiday. We've just been studying price action. Okay, again, keep your eyes on that upside objective for inside the range liquidity. Again, if you're trading with that, we can either use this one here to here, 50%. Your stop loss right here. You move to break even. It's very small, obviously. If it comes back and taps you out, to get half your trade off there, unless you use this one here I gave you earlier, 50%, take half your trade off, move to break even, and wait for 62%. Come back and tap this fair value gap here. Randy keeps making these comments and delete them. You don't have to delete them. You have an opinion, you're entitled to it. Just don't be rude. But you're entitled, Randy, to have an opinion. Just don't comment on stuff you weren't here for, that's all. See how we've come back right back inside it? Every time you take out a high, look for these little spaces right here. See these little imbalances, little bissy. So this is where you can get the reverse. Keep your eyes on these little things. They're small and you got to be able to catch them quick, right? So all the time we stay below that one, we have an imbalance above us. Look at that range, 50% of that range. Optimum trade entry reversal will continue for that upside objective. It loses its luster if we trade below here on a close. This needs to support price to go higher. And ideally you want to see this one give way, order block, and then back into this old one back here. So we're trading below that level. Come back up inside it. Look for 50% of that range. There's the fair value gap here. We've taken out some lows. You can see how this gets really choppy now. So hopefully you study this price action. You can see here you get so much overlap right now. You can decide which direction it wants to go. The trick here, and this is the fun part for me, is trying to stay on the horse now. How to keep in the direction. Where does it fail for you? And if it fails, then you're on the wrong side. How do you get back in price action again? Get back on the horse real quick. So now we've closed above that level. That's good. Find support at this and start going higher. If it closes below like this, big drive down 50%. Through it again. Watch this one here on a close. We just tapped the 50%. Is it now going to shoot back right back up again? Just ran down to the discount array inside the small range here. Wait for this to close and see where it closes. Wicks do the damage, remember? And it just ripped down to the discount, quickly grabbed up that discount portion of that range. Closed above it, right there. Now you want to see that continue going higher. %50 of this wick, look for 50% of that wick. If you lose 50%, look for lower prices. inside this with the bodies. Through it, through it, through it. Right inside it now. Welcome to lunch hour. Keep your eye on 50% of this wick, otherwise further upside. And we want to stay above here. If we use this as support to go lower, look at this range back, this guy back here again, and see what kind of reaction you get off of that inside this range. If we do end up taking those lows, look for this fair value gap down here, 50% of the fair value gap, and see what kind of reaction you get above that. Look for those reversals again, like lunch hour taking out this low and getting a reversal to continue back up for those equal highs, and that drawn liquidity for the lunch hour, like these relative equal highs here. Like if we take this out here during the lunch hour now and 1 o'clock, we'll create a reversal, look for that reversal, and then look for a drive back up into the upper part of the range. We're through the 50%, so we're going lower. Look for, like I just said, look for this level here, those lows to get taken, and then wait for a fair value gap to form in here, a SIBI that you can trade off of once you've taken these lows out. Ideally, it would be nice to see this fill. If it doesn't, look for the consequent encroachment. Those are key levels you're looking for a reversal. You got 3 levels, one here, the consequent encroachment, and the low. We have another fair value gap sitting right here. So if we've traded above it, remember we're talking about trading back into it. So if we trade back into it now, you've got the consequent encroachment of that one and the low. And the low lines up with this imbalance down here as well. So you've got all these downside objectives here. 1, 2, 3, and 4. Constantly look for a reversal to happen, and then gun for the nearest high. That's my thoughts. That's what I'll be watching for over lunch. But until tomorrow, or actually Wednesday, I'll meet you guys on Wednesday. Tomorrow I might be in here for a couple hours tomorrow morning, and I'll be back here for Wednesday for sure. And then we got non-farm payroll this week, so it's a nice little price action study. This on Friday, or sorry, yeah, Thursday, Friday. Keep watching your levels. Trades through it now. This is 50% of that range. %, just dipped into the discount array. If we trade above this, find support, look for this high, back up into that range, look for that upside objective I was mentioned earlier. If we just come back into that fair value gap right here, react off that and continue coming lower, look for lunch hour down here. But until Friday, my friends, I will see you guys then. Thanks for tuning in. Thanks. I hope you guys got to learn a little something today in terms of staying in price action and catching some beautiful little, both directions. You caught an up today, we've caught a down, another back up, and we've caught another reversal on the way down. So we've stayed pretty much on target the way we wanted to today. And I hope you got to see that. If you didn't, tune in on Wednesday and we'll do it all over again. So until then, I will see you guys. Have an awesome day, and I'll probably see you tomorrow morning. Take care. See you later.